Hi, welcome back to Point of Sale, the retail supply chain show where we break down great retailers, the supply chains that move them, and the data they use to make decisions. I'm your host, Andrew Cox, Senior Retail Analyst here at FreightWaves. And today I once again have Mr. Danny Loe with me. He is the Chief Yield Officer at ArcBest. He's also the President of Asset Light Logistics at ArcBest. Last time Danny was with us, we spoke about managed transportation and the service that can provide to retailers. And we also spoke about the complexities of product launches. I highly recommend that conversation to anyone who hasn't seen it. Go back and check out episode 10 of Point of Sale. But today is episode 16, and Danny joins us once again. Today, we're going to talk about market conditions because we've seen some reprieve. We've seen the Outbound Tender Reject Index, our own internal measure of capacity and carrier compliance. We've seen that come down a little bit, which is progress. It's still very high and capacity is still very difficult to source, but we're going to get a firsthand account of how things are coming from someone who has a very robust view of freight markets, someone who touches a lot of freight. So Danny, thank you so much for taking the time to do this, and welcome to the show once again.
Hey, thanks for having me again. Good to be back on.
Absolutely. Danny, let's start very broadly, right? As I said, we've seen the Outbound Tender Reject Index decline a little bit. Is capacity loosening right now, and is it going to stick?
I think if you think back over the past month and a half or so, we had the DLT week in May, and it caused capacity to drop. You had a lot of capacity decide not to be on the roads during that point. You also had the holiday weekend where you get vacations and also a drop, and so you kind of had a little peak, the continued climb, and so maybe the last week and a half. I agree with you. I think your metrics that you talk about are what we feel to maybe a slight lull. But we think it's very temporary with what we see. We're going to be heading into the end of a month, end of a quarter, head into a holiday weekend with the 4th of July week, and so we're kind of headed even into a higher peak, higher demand season that it seems like things will be really, really tight as we move into the next few months.
Yeah, that was my next question was, why have things moderated a little bit over the last week? It doesn't seem that demand is going anywhere. Is this simply a function of drivers getting back on the road?
I think it's, my feel is it's a little bit about more drivers back on the road, potentially that there was enough time there that maybe some of the carriers got back on cycle a little bit. And so you're able to have on cycle that capacity was running. And so you weren't seeing as many rejections potentially in some their committed lanes or regular lanes that they're running. But, again, that disruption seems like it's coming again.
Danny, how have contract negotiations been in general at ArcBest? Have you been able to solidify the routing guides? Have your carriers seen, or have your shipper customers seen their routing guides solidified over the last few months? Like, give me some idea of where we are from a carrier compliance standpoint now versus maybe the beginning of the year.
Yeah, I think it's tougher. I think it's probably depends on too when you implemented those carriers. So if you were running an RFP and you're trying to implement new routing guides the last month or so, you're seeing a lot of carriers reject those. And so you're seeing a lot of callbacks for the secondary awards and tertiary awards that are probably not going to be there. And you're seeing probably a little bit more kick out to the spot market. I think we've seen an uptick in what you would call mini bids or maybe quarterly bids where you're kind of this short-term capacity. And that's probably the right play for a lot of these shippers to be able to really just secure some capacity for over a period of time. I'm not sure right now, unless you're on a really have to have a specific capacity, locking in long-term rates in this market is probably not advisable.
Danny, what about moving forward? This is something that I've been thinking about just with all of the crazy supply and demand swings we've seen, these bullwhip effects across every sector, across the industry. Should short-term contracts become kind of a more of a bigger thing in this industry?
I think it's an option. I think that's where when you work with logistics providers, you're working through what are you trying to accomplish. And so I think the more volatility you have, probably having some of these short-term contracts and different probably makes sense. If you don't have the volatility, then the longer-term contracts are probably the right play.
That makes sense. You mentioned spot markets a minute ago. Let's just talk a little bit about the dynamic between spot and contract right now. We're seeing, at least in the outbound tender volume index, our measure of, mostly contracted volumes, it remains extremely high. It's actually pretty much steady over the past, 2 months, while the outbound tender reject index has fallen, which actually indicates that demand has increased. Are you seeing that, are there more volumes flowing through the spot market right now or through contract? What do the dynamics look like there?
Yeah, I think what we would see from our perspective is that there's a little bit more in the spot market. You're seeing a lot of, like I said, you kind of mentioned the tender reject maybe has come down a little bit, but it just seems like there's more flowing out there. There's potentially maybe more that was just ad hoc freight that wasn't in a contract to start with that's floating out there. So, our feel is that the spot market is still pretty tight or, rising as compared to what we've seen in the previous month or so.
Yeah, we've got the truck stop 7-day moving average above $3. I think it's still at like $3.13, down off the high, post polar vortex in February, but it's still, extremely high from a historical standpoint. Danny, talk to me a little bit about the dynamics going on right now between truckload and LTL volumes, because we've seen a lot of spillover over the past year from LTL, from parcel and from truckload into LTL. What does that look like these days?
Yeah, I think it's an interesting thing. I think there's a certain level right there, that there's always overlap between, a 4-stop truckload stop off compared to a 5,000 pound type, 4 or 5,000 pound LTL shipments, or even 10,000 pounds. LTL networks are really tight with capacity. And so I think a lot of shippers are finding where the right play. There is still some capacity, and that's what we work with our shippers and customers up with right now. Is even in LTL networks, there could be some backhaul lanes where they are looking for volumes to fill those backhaul lanes. And so it's really about working to make sure you're putting your freight in where carriers need it right now, whether that be truckload or whether that be in the LTL market. But again, don't know that I've seen the LTL market this tight at this time of the year, and some of the announcements we've seen in the last few days kind of verify that.
What would you recommend to shippers and to do that, to get their freight in the right place for carriers right now? Does that start with open communication? How do they go about doing that?
Yeah. Probably the best advice was about 6 months ago to be really working through relationships. But probably in the immediate piece is really it's having those partnership, open conversations. What are the carriers looking for? What are you trying to accomplish? Because in some cases, maybe you're having to change up your orders. Maybe you're having to change up a little bit of your distribution to fit through what the available capacity in the market right now. But if you're just trying to procure or trying to force freight into carriers at this point, you're going to get a bad result, my guess.
Reminds me a lot. I think it's a Japanese parable. They say, what's the best time to plant a tree? And it says the best answer is 20 years ago, but the next best answer is yesterday.
Yes.
Right. So talk to me about what your customers are saying, right? We're talking a lot about shippers, about how it's difficult to secure capacity right now. What are they saying to you, and what are the things that they're requesting from ArcBest?
Sure. I mean, options is really what they're requesting, and this capacity help us find. But, to step back a little bit, you're hearing a lot about this unemployment, the ability to find workers. And, it's affecting us in both in the LTL and it's affecting us in truckload with overall capacity. But you're hearing some more even on the dock and receiving and the ability to turn trucks. And so you're getting a drag on equipment in different pieces too. And so conversations with them about what are the schedules, trying to make sure that they were both on the shipping and the receiving end as well, that we're working with them to schedule, make sure that we're not getting equipment held up, and that whether it be, our own assets, what we do ourselves, or whether it be our partner carriers, when capacity is this tight, what you don't want to do is to be inefficient in how you're using that capacity. So a lot of conversations about that. Then as far as they're trying to understand what their supply chain looks like, and they have a lot of volatility. They have a lot of, whether it be, we're talking retail here, whether it be the supplies or inbound products or different things, when are they going to get it? When is it going to get to the shelf? And so trying to forecast out, to plan better, maybe not for today, but maybe even for 2 to 3 weeks out with what they're seeing.
Yeah, this is a conversation I'm trying very hard to have. I'm hoping to have it soon with Nike. I'm a big Nike fan. I would call myself a sneakerhead, and I watch these shoe drops, right? They say they're going to release 50,000 pairs of shoes, And every one of them is just getting pushed out by months at a time because their supply chain is so backed up. The things that they're hoping to get here are not getting here. They've renamed shoes that were, Easter colored. They've just renamed them to candy shoes because they weren't here by Easter and they haven't even released yet. So this is happening to every shipper, big, small, and in between. Are smaller shippers as disproportionately affected over the road as they are on the seas right now? Are they being outbid by their bigger peers, or what can they do to avoid being outbid? How can they work closer to make sure they get their freight moved?
Sure, I'd say with what we see with our customers, that the answer to that would be no. I agree with you when you're looking kind of the ocean moves coming in right now. It's different. I think over the road with what you're seeing, if you've had a partner and you had that capacity, most of the providers are honoring that capacity. New bids or RFPs or new spot business coming up will be a little bit different, but I think you can find a truck to move it right now. It's really what's the price point to be able to move that truck. A lot of the independents are looking out there and they're playing the spot market, and so you can find the right rate to move it, then you can get the truck and move it.
Is that, I meant to ask this earlier, is that also one of the reasons that we're seeing at least a little bit of better compliance here? Are we seeing contract rates continually being bid up towards spot rates? Is that why we're seeing a little bit of progress here?
I think that's piece, and I think it goes back to those shorter term bids. Whether it's a carrier or a broker that's providing these committed rates, the longer the time frame right now, no matter volatility, introduces risk, and so your providers are going to have to factor in risk as they're pricing that. So I think the shorter terms you can at least fill out the next 2 to 3 months, but I think anyone's really hard right now to press what the first quarter of 2022 is going to be.
All right, Danny, the last time I'll ask this one, it's just kind of a different way of asking it. What can shippers do, what can retailers especially do right now to make their own lives easier with moving freight and to also make their transportation providers' lives easier moving freight?
Yeah, so I think that we talked a little about making sure you're a shipper of choice with regard to the dock, whether it's receiving or it's shipping. It's make sure you're making the carriers efficient. That's always going to be a piece, especially when equipment and just capacity overall is tight. I think the other piece is working with your partners, making sure you understand what you're trying to accomplish. Maybe if you're moving 10 pallets, do you really need 10 pallets there on a certain day, or is it really 2 pallets and the other 8 pallets are really 2 to 3 weeks later? Is having those conversations, because I think more than ever right now, it's about matching up with your needs with what capacity, or otherwise you're going to pay quite a bit of a premium over what you budgeted or what you were planning to spend for that.
Right, you're exactly right. Let's talk about certain geographies. Are there any areas that you are seeing tighter markets, or it's more difficult for you to source? What are you seeing? I know, at least from we put out some newest indices this week on capacity, on carrier capacity direction and carrier capacity. There's another one that I'm missing, but basically the Southeast right now is really tight. Everything around Savannah, and also, of course, that Ontario market where there is nonstop imports, it seems. What are you guys seeing?
Yeah, that's very similar to what we're seeing. I mean, I don't know that the outbound California market is hotter or tighter than it was. I'm not sure you can at a certain point. You can't really change it if you're pulling every container off the boats right now and they're putting on. But yeah, if you have some freight moving to California, it's a great time to move freight to California because you can relocate a lot of people out there to move the outbound. But I'd agree with what you're seeing, kind of the Southeast, but outbound California is still especially tight.
Danny, you mentioned earlier that this could be the tightest LTL market that you've seen, and we're not even at peak season right now. So let's talk about seasonality just for a moment, because demand is unwavering. We have extremely high consumer demand, even though we have started revert back to services. Goods demand remains really strong, and even beyond that, we've got inventory levels really low across the board at retailers. What are you seeing from seasonality? How is ArcBest helping your retailers and your customers get through this very, very, very tight and big peak season?
Yeah, so in my 20 plus years in the industry, I don't think I've seen the LTL capacity this tight before. You've seen some announcements, and even when we talk to our partner carriers, we know where there are certain areas they just won't pick up freight or take freight to. And so some of this demand causes inefficiency in cycles in LTL providers because it's typically what we see. In my experience, is LTL is is front haul in nature, right? In other words, you have more going in certain lanes than coming back. And so I think the biggest key is making sure you're working with your providers and finding where they need freight, because even at a tight capacity market, like I've described before, there are certain areas where carriers may want freight. And so making sure you're locating that there to make sure you're working with them, but then having a width and a broad availability of capacity option to you is the key. And so, for us at ArcBest, that's really what we talk to our customers about, is our ability to not only use our assets inside of ABF, but also our partner LTL carriers and our the breadth of carriers that we have, and the fact that we understand what they're looking for and can have good conversations with them. So that's the conversation we're having, and then that spills over to just the overall supply chain, orders, truckloads. Are there ways to build truckloads around certain maybe distribution centers or certain, we kind of talked about product launches before. Well, sometimes maybe it's not a product launch. Maybe it's just a one time that you're injecting freight deeper into an LTL network to maybe hit a point where capacity is a choke point at a capacity for them, but that you can get around it and insert it in their network. And then you're able to get to the available capacity that they do have.
Danny, always a wide range of freight knowledge coming from you. Thank you so much for your time today. I want to give you a moment, give everyone listening a shout out where they can go learn more about you and your services, where they can find more about ArcBest.
Sure. Feel free to go to arcb.com and find out more about ArcBest. I'm on LinkedIn if anyone wants to connect there and has any questions. So appreciate the time. Glad to talk about it. Look forward to talking to you again soon.
Absolutely, sir. We'll have you back here in a couple months to do it again, chat some more, whatever's going on in the market at that time. Thank you so much, Danny.
Thank you.
All right, everyone, that has been it for episode 16 of Point of Sale. Thank you so much for tuning in today. Remember, if you liked what you heard today, go ahead and subscribe to Point of Sale on Apple Podcast or Spotify, wherever you listen to podcasts. If you're listening live, thank you so much for joining us. You can also subscribe to Freightcast. That is where you can get all of FreightWaves audio feed on one tidy feed. You can get everything we got there, so I highly recommend you do that. All right, everyone, that's been it, episode 16. We'll see you again next week. Thanks.